Have you wondered why good news sometimes seems to spell bad news on Wall Street? It's a curious paradox that can baffle even the most seasoned investors. Let's delve into this intriguing phenomenon. Recently, Wall Street exhibited a negative reaction to positive economic news. Why, you ask? It's because good news often puts pressure on the Federal Reserve to increase interest rates. These rate hikes are unfavorable for stocks as they can eat into companies' profits. Consider the strong job market. While it's a positive sign of economic health, it also sparks concerns about potential inflation. Investors would ideally prefer a strong job market that shows signs of cooling. A recent December jobs report that showed slower job growth and wage growth was thus seen as a positive indicator that the Fed's efforts to curb inflation might be working. Now, let's turn our gaze to the east. Asian shares were mostly lower recently, with Japan's benchmark, the Nikkei 225, declining by 1.1% due to slower than expected inflation. This suggests that the Bank of Japan may delay tightening its monetary policy as weaker price increases relieve pressure. Chinese markets also fell, following government efforts to stabilize share prices and the property sector. However, not all news was gloomy. South Korea's Kospi jumped 1%, and in the US, the S&P 500 set a record for a fifth straight day, with the index adding 0.4%. The Dow Jones Industrial Average climbed 0.6%, and the Nasdaq composite gained 0.2%. A notable highlight was IBM's stock, which rose 9.5% after reporting positive earnings. In summary, the economic landscape is a complex tapestry woven with various threads. Good economic news might exert pressure on the Federal Reserve to increase interest rates, which can negatively impact stocks. A strong job market is desirable but can also hint at potential inflation. Meanwhile, slower than expected inflation in Japan suggests a delay in tightening its monetary policy. Despite some downturns, there are still glimmers of optimism, such as the record-setting streak of the S&P 500 and the surge in IBM's stock. Navigating the economic waters can be tricky, but understanding the intricate dynamics at play can equip us to steer the helm with confidence and foresight. Remember, the world of finance is not always as it seems, and sometimes a step back can provide the clarity needed to see the bigger picture. Let's not forget about the European markets. As we navigate these economic waters, we see that European shares are mixed. Investors weigh the impact of inflation, and the European Central Bank is expected to maintain its loose monetary policy to counteract these effects. Meanwhile, over in the UK, the shadow of Brexit continues to loom over its economic outlook. The European markets, much like the rest of the world, continue to navigate the choppy waters of inflation and Brexit, adding yet another layer to our complex global economic tapestry. Looking ahead, the future of the global economy remains uncertain. The ongoing pandemic continues to pose significant challenges, throwing a spanner in the works of economic recovery. But that's not the only concern on the horizon. Climate change has emerged as a pivotal issue, with its potential to wreak havoc on economies worldwide. Yet, amid these uncertainties, there's a glimmer of hope. Technological advancements and digital transformation are reshaping the economic landscape, presenting opportunities for growth and innovation. Despite the uncertainties, the resilience of the global economy continues to inspire optimism. We're navigating uncharted waters, but with every challenge comes the opportunity for change and growth. Before we wrap things up, we'd like to remind you that if you enjoyed this video and found it informative, don't hesitate to hit that subscribe button and give us a thumbs up. Subscribing to our channel and liking our videos not only helps us continue to provide valuable insights into the complex world of global finance, but it also ensures that you won't miss out on any future updates. We're dedicated to keeping you informed about the latest trends, changes, and predictions in the economic landscape. So make sure you stay connected and stay informed. You don't want to miss out on our next insightful video. Let's continue this journey together, navigating the economic waters of our ever-changing world.